بسم الله الرحمن الرحيم. والله أنزل من السماء ماء فأحيا به الأرض بعد موتها إن في ذلك لآية لقوم يسمعون. وإن لكم في الأنعام لعبرة نسقيكم مما في بطونه من بين فرث ودم لبنا خالصا سائغا للشاربين. ومن ثمرات النخيل والأعناب تتخذون منه سكرا ورزقا والأعناب تتخذون منه سكرا ورزقا حسنا إن في ذلك لآية لقوم يعقلون. وأوحى ربك إلى النحل أن اتخذي من الجبال بيوتا ومن الشجر ومما يعرشون. صدق الله العظيم.
بسم الله الرحمن الرحيم. Salatu ve selamu ala Resulina Muhammedin ve ala alihi ve sahbihi ecmain. Brother Kunrat Vira Subrata, Director, IDB Regional Office, Kuala Lumpur. Distinguished members, distinguished guests, sisters and brothers, welcome to IDB ADFIMI Joint CEO Seminar, Status and Future of Financial Inclusion in the Southeast Asia. It's now a tradition to hold an IDB ADFIMI Joint CEO Seminar for the benefit of DFIs during the annual meetings of Islamic Development Bank. The purpose is to convey to the executives of DFIs a message on a currently hot topic of interest to NDFIs. ADFIMI Management Committee has proposed several subjects to be considered for the CEO seminar to be held during the 41st annual meeting of the IDB Group. IDB has selected financial inclusion in Southeast Asia to be the theme of this year's CEO seminar. Objective of this forum is to update CEOs and executives of NDFIs of the state of play in financial inclusion in Southeast Asia and the role of Islamic microfinance in financial inclusion. In light of the global financial situation, the key challenges for financial authorities are to maintain financial stability, manage sovereign risk, ensure long-term finance for economic growth, but also to encourage financial inclusion. What is financial inclusion? Financial inclusion is an important thrust in the development by ensuring that every economic activity, geographical region, and segment of society have access to financial services. Financial inclusion would also include the general public having access to financing, financial services, financial redress, and financial information initiatives are needed to be continuously undertaken to ensure that individuals and viable business have adequate access to financing. In particular, comprehensive mechanisms are needed to ensure small and medium enterprises have continued access to financing. This includes establishing institutional arrangements, strengthening financial services providers, developing a microfinance institutional framework, establishing a special funds and financing schemes, and improving outreach and awareness. Access to financial services can be achieved through conventional and Islamic bank branches, as well as through alternative delivery channels such as microfinance institutions, mobile phone banking, and mobile units to increase outreach efficiency while keeping transaction costs low. Improving access to financial services also facilitate public's access to affordable financial products and services. Financing institutions are also required to offer basic savings account and basic current account of minimal cost to all. Requirements are also in place for banking institutions to disclose and make available information on fees, charges, and commissions imposed on products and services. This ADFIMI regional seminar will review the importance and status of financial inclusion in the world as well as in Southeast Asia in terms of conventional as well as Islamic finance. Today we have 3 speakers, and the forum will be moderated by Kunrat Wirasubrata, Director, IDB Regional Office, Kuala Lumpur, Malaysia. Now, the floor is yours, Mr. Moderator.
Bismillahirrahmanirrahim. Brother Ayman Orjan, the chairman of ADFIMI, the distinguished speakers, ladies and gentlemen, Assalamualaikum warahmatullahi wabarakatuh. It's really a pleasure and an honor for me to be asked by ADFIMI to moderate this conversation. And we are also honored to have distinguished speakers to be among us. Pak Saad Suharto from Indonesia, he's an expert in Islamic microfinance. Professor Al-Habshi from Malaysia, he is both an expert, practitioner, as well as academician now in SAFE. And Puan Hajjah Rashidah binti Haji Sabtu from Brunei Darussalam, who also will share with us her the experience of Brunei in promoting financial inclusion. So without further ado, probably let us invite the speakers to come to the stage. Bismillahirrahmanirrahim. The title of our conversation today is Status and Future of Financial Inclusion in Southeast Asia. That's why we have the representatives of three major South Asian countries in our room today: Indonesia, Malaysia, and Brunei Darussalam. As everyone might have noted, in this week of IDB annual meeting, financial inclusion has become like a buzzword. Everyone speaks about it, everyone discusses it, and especially it has become quite an important concept, especially after the world completed the Millennium Development Goals in 2015, and they shifted to Sustainable Development Goal in 2016. So for the next 15 years, we will be trying to achieve the 17 goals of the SDG. And apparently, financial inclusion is considered to be a very important factor, to be a very important tool which can help the world deliver the objectives of the Sustainable Development Goals. So we are lucky to have the representatives of these three countries. They have come here with a rich experience, both individually as well as institutionally. So I would like to probably begin with Pak Saad Suharto. Pak Saad, Indonesia has been quite active in promoting microfinance. And you are one of those people who are very active in also promoting Islamic microfinance. How would you look at Islamic microfinance being a very important tool to ensure the acceleration of reduction of poverty as well as boosting prosperity within the context of the SDG? You may want to sit here to answer, or you would like to, please.
Assalamualaikum warahmatullahi wabarakatuh. Ladies and gentlemen, brother and sister, I would like to thank to IDB to the opportunity given me to PPMT Group to share about our experiences in microfinance And this opportunity, we would share that what PMT doing to development of productive community in Indonesia. And thanks to Kori, which reciting Al-Quran, the verses inspired me about, to have our logo, a drop of water. Because as verses tell us that rainfall in the dead earth, and then the earth grow with full of life. Our presentation today will focusing in three main points. Firstly, the PMT model, and then performance and achievement, and then plan and potential collaboration. Next. Okay, next. Ladies and gentlemen, as you know, that PMT literally consists of three words. There are pahit, and then mal, and then tamwil, translated roughly as the house of social and business. So from the name, you can see that we have strong social commitment. We put word of social in front of business. Our mission is to support the poor to help themselves to be more productive, to be more independent with various programs. And then PMT actually established independent by people, by the community, and hundreds of PMT established by grassroots, mostly established in small town or regency across Indonesia. And we have rule or guidance that all of PMT must be using cooperative as legal formal and supervision by Minister of Cooperative of Indonesia. Brother and sister, next. This is our unique business model. As mentioned before, PMT look like the house with two pillars, namely mal for social activities and tamwil for business. In social activities, we collect funds from donor and faith-based fund as zakah, infak, sodakoh, and wakaf, and also open for donation and CSR from general public. And then from tamwil, or business one, we have fund from various sources, from member, investor, Islamic bank, and financial institution. Certainly, all of those must be in Sharia compliant. So, because we have two pillars, social and business, then we can give its model to the community. To reach poor of the poor, in the red dot, we start with some of technical guidance, training, and grant-based financing, like Court Hassan. Without Baitul Mal, we cannot serve social activities for the poor, people in the red dot and yellow dot, as shown in the figure. And just have people in the green dot with commercial or business scheme. So how we serve the communities? Usually PMT have three main points. Firstly, start from saving, and then secondly, customized product and services through many PMT, and thirdly, social and philanthropic activities. So allow me to explain more detail in the next pages. Ladies and gentlemen, access of the poor to do saving, sometimes not simple activities. We talk about tiny amount of rupiah they allocated to saving. So in its condition, administration charges is still an issue. So we save them with simple, affordable saving product without charges or very small charges. And we set up comfort office near their office, near their business, with fingerprint as shown as figures. And in order to make them easy but safe to saving, we bring the bank to them. It means that we bring smartphone with banking application and meet them in wet market, in their workshop, in their farm, etc. About financing product, we believe that every business and situation have uniqueness of scheme of financing product. So in country that have a lot of cultures, a lot of different geographic situation, a lot of business, industry, each of them need different schemes, product, and treatment. For example, financial product for farmer will not be applicable for traders in wet market. For traders, based of our experiences, need to collect daily because they have daily cash flow. But certainly, we cannot do this for the farmer. For farmer, we usually give 3 or 4 months grace period and pay at the harvest. In Japanese, call it yarnen atau bayar di waktu panen or pay during the harvest time. In our mission to develop productive communities in order to support community to be more productive, BMT through our Baitul Mal serves community with a lot of social program and philanthropic activity. As part of the effort to continuous improvement, we established Perhimpunan BMT Indonesia or BMT Union of Indonesia. We working together, share knowledge and experiences, build common platform, guideline, etc. And Alhamdulillah, after 10 years, BPMT role as self-regulatory organization of BMT and apex institution of BMT. BPMT mission just only one, to support the growth of the member, and our member are highly screened and selected BMTs. As you know that there are approximately 4,000 number of BMT in this country, but not all BMT have good governance, so we just selected 564 BMT, and some of BMT have many branches, so in total we have more than 800 offices across Indonesia, with more than 12,000 employees, and now our group serving more than 2 million members. As I mentioned before, that BPMT's mission is to support growth of BPMT's member. So BPMT established a number of subsidiaries to support as infrastructure for the growth of BPMT. For example, we established BPMT Ventura, a financial company, to support liquidity of BMT. Based in Jakarta, have office in Equity Tower in CBD, the financial center of Indonesia. Have role to bridge fund from angel investor and bank to BPMT's network. And also to maintaining or handle the amanah from community, we established BPMT Institute that have a representative campus in Yogyakarta. In this campus, we do certified training for all of skill, all of every position in BMT. BPMT Social Ventures is our international representative based in Singapore, and then BPMT Roasia is our IT company. And the latest one in our big family is BPMT Akreditasi. We do accreditation to all of BMT. And if they pass qualification, they grant Islamic Microfinance Standard logo, or IMS logo, could display in their logo, their offices, and their product. Ladies and gentlemen, this is our performance. In the topic of microfinance, the challenge is actually to maintain microfinance institution playing still as microfinance institution. So as you could sound in the slide, that after two decades, BMT not change to play microbanking, proven by average of financing are still below 5 million of rupiah. BMT have solid performance with total asset of the group exceed 11 trillion rupiah in 2014, serving more than 2 million members, managed saving of our member exceed than 10 trillion rupiah, and the perform of financing is quite success, as shown that FDR of our finance to deposit ratio is above 100%. From this diagram of composition of financing portfolio, we can show that 62% of our portfolio that are financed in trading, mostly in wet market, and allowed by 22% finance in various kind of services like ojek or motorcycle taxi, handphone services, etc. 7% of our portfolio financed in home or small industry like tofu, tempeh, and various food and beverages, and then bamboo, silver, handicraft, etc. And then 7% fund in farming field, just 2% in consumption. For our plan, we will put our best effort to enlarge our financing portfolio in farming and home small industry in order to robust production in our community, especially with profit and loss scheme. And then we will improve our advantages to service to those sectors by developing special schemes which are in line with the uniqueness need of those sectors. And last but not least, we are talking about the poor and financial inclusion to alleviate poverty. So we will increase our portfolio with our own fund or donation or inviting other parties to join hands to handling the problem with zakat, infak donation, and crowdfunding, etc. Summary. Financial inclusion is about creating access for the community, not to the community. The truly financial inclusion must be able to reach the bottom of the pyramid, and this can only be done by commercial fund and social fund, which are well integrated. Without social fund, the bottom of the pyramid will be left behind. PMT have been doing financial inclusion since decades ago. They are on the right track, alhamdulillah, and they need your support to grow and scale up. Financial inclusion is about making the community to be more productive, not to be more consumptive. So to close my presentation, allow us to encourage you to support them with your social fund or your social impact fund with profit and loss sharing to lift them up from poverty to prosperity. Thank you for your kind attention. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Pak Saad, for a very detailed and comprehensive presentation. And we can see the history of Islamic microfinance in the form of BMT in Indonesia. I hope there has been quite instructive for us to learn from. Next, I would like to invite Professor Al-Habshi. You know, Malaysia is already in the very advanced stage of developing its Islamic finance. Malaysia is basically the leader of the world in Islamic finance. 20% of Malaysian banking sector is Islamic banks. So we would like to hear from Professor Al-Habshi how Islamic finance can really be harnessed to for us to achieve this sustainable financial inclusion within the framework of the SDGs. For the sake of time, actually, if you don't mind, Prof, I know Professor Al-Habshi is quite efficient in delivering his thoughts.
Thank you very much. 20 minutes, right? Inshallah. Bismillahirrahmanirrahim. Alhamdulillah Rabbil Alameen. Wassalatu wassalamu ala Sayyidina Muhammadin Ashrafil Anbiya al Mursalin wa ala alihi wa sahbihi ajma'in. Assalamu alaikum wa rahmatullahi wa barakatuh. Mr. Kunrad, the moderator, distinguished speakers, distinguished guests, and ladies and gentlemen. Actually, the title of my paper is The Financial Inclusion versus Poverty Alleviation and their correlation with reference to SDGs, or Social Development Goals. Yeah? So I'm not going to touch about the Islamic finance in Malaysia. Because this is the title that I have suggested, and it was accepted, and I have prepared, so it is difficult for me to talk on something else at this juncture. Next. Can I have next? So those are the contents. We have the background and motivation, and then financial inclusion and poverty, financial inclusion, and MDG, which is Millennium Development Goals, and then a journey from Millennium Development Goals to Social Development Goals, and then the methodology, the result, and financial inclusion and SDGs. Basically, this is a paper which is part of a PhD thesis by my student, who is actually looking into poverty, financial inclusion, and SDGs, that is social development goals. We are trying to look to find out whether there is any relationship between microfinance and financial inclusion with economic growth. In other words, if we were to be successful in with our microfinance projects, right? Will that contribute towards the growth of the economy itself? Right? That we think is very important, because we spend a lot of money on microfinance, and microfinance has been everywhere. It is not only in Southeast Asia, but I think it is basically global, because this is one of the instruments or one of the models that people have been using to alleviate poverty, right? And poverty is everywhere, and therefore microfinance become a very fashionable, I would say, fashionable model. Everybody talks about microfinance, but there are so many problems with microfinance. Yeah? Now, so what is the real issue? The real issue is we are trying to determine the relationship between poverty and financial inclusion, whether there is any positive correlation between poverty and financial inclusion, and then what is the role of financial inclusion to achieve SDGs, to eliminate poverty. SDG is the Social Development Goals of the United Nations. Now, why is it an issue? Of course, I think it is understood that this level of poverty. Next. Or do I control myself? What is that? Yeah. So that map of the world tells you the level of the income of various countries. For example, the highest income is the blue in color. You have America, Europe, Australia, and part of Middle East. And then you have the next level, which is the green color. You can see Russia and Central States, and then the Latin America. And then we have the lower middle income, which is less than 1,700 per annum, 700 pounds per annum. That is the darker red in color. And then the brighter red is the low income, which is 450 pounds per annum average income. So that is the distribution of income, and that shows the inequality as well. Yeah? And why is it an issue? Of course, we know, for example, that 16.1% of world population lives with less than $1 a day, and 57.6% with less than $2.5. 44% of these extreme poor people is concentrated in the Muslim countries. About 65 million people around the world receive small loans without collateral through microfinance. In other words, microfinance is serving around 65 million people globally. 72% of the people in Muslim countries do not use formal financial services. In other words, they do not have access to finance. 20 to 40% of the people do not use conventional microfinance to avoid interest. This must be definitely from the Muslim countries. And then currently more than 300 Islamic microfinance institutions are working to alleviate poverty. 300 Islamic microfinance. We're not talking about microfinance, Islamic microfinance. If you talk about microfinance, it is very much more than 300. Now, what is Sustainable Development Goals? There are actually 17 goals. I will go into that later. But this is the one that on the 25th of September 2015, the United Nations General Assembly adopted the 2030 Agenda for Sustainable Development. I think this topic was touched earlier in the earlier session. along with a new set of development goals that are collectively called the Sustainable Development Goals. Right? And the agenda is a culmination of many years of negotiation and was endorsed by all 193 member nations. UN Secretary General Ban Ki-moon noted that the new agenda is a promise by leaders to all people everywhere. It is an agenda for people to end poverty in all of its forms, an agenda for the planet, our common home. Very interesting observation from the Secretary General of the United Nations. Now we have this, the main emphasis on Sustainable Development Goals. There are 5 different aspects. One is the people, that is we want to reduce, eliminate poverty and hunger. And then number 2 is prosperity. We want to make sure that people do not only live out of poverty, but they must be prosperous. And thirdly, there must be peace globally. And the next one is the partnership. That is, there must be complete commitment to ensure that there is partnership globally. And finally, we are looking at the environment itself, the planet itself, to make sure that the planet is good for the next generation. We don't want to spoil the planet now and finally find that the next generation suffer. So these are the 17 goals listed under the Social Development Goals, right? I don't know. Sorry, what's happening? Starts again. Yeah. So the 17 goals, number 1 is the people, that is the reduction of poverty and hunger. The second one is the first one is poverty, the second one is zero hunger, the third one is good health and well-being. In other words, you don't want people to be just out of poverty, but they must be happy, the social life is good, and so on. Next one, there must be proper education, especially at the primary level. And somebody was mentioning it should also be at the secondary and tertiary level. And then number 5 is gender equality. Number 6 will be clean water for the people, potable water. Number 7 is the affordable energy. Number 8 is decent work and economic growth. Number 9, industry, innovation, and infrastructure. Number 10 is reduced inequalities. These are the first 10 objectives really are meant for the poor. The next 7 are meant for the environment itself. So I don't have to waste time on that. So this is the list of the 17 goals. For example, I think I have mentioned the first 10. The next one, 11, is the safe cities. 12 is sustainable consumption. 13, climate change. Number 14, marine conservation. Number 14, biodiversity. Number 16, peace, justice, and governance. And number 17, means of implementation. That is where the commitment comes in. Now, the journey from Millennium Development Goals to Social Development Goals, the Millennium Development Goals has only 8 different goals. And if you look at the 8 different goals, they are quite similar to the first 10 of the SDGs. And so I have the 8 goals of the Millennium has 21 targets with 60 indicators. And the 17 goals of the SDGs has 169 targets with 304 indicators. I think with not only the targets but also the indicators, I hope that we know exactly what we are trying to do, what we are trying to achieve. Otherwise, there is no target. Yeah? Here, I think it's very, very detailed in terms of initiatives, and that's very, very important. Now, this is the mapping from the Millennium Development Goals to Social Development Goals. And again, the Social Development Goals, we have the different emphasis. I don't want to go into that. What we have done is some empirical study on the relationship between poverty and financial inclusion as well as economic growth. And our study actually looks at the hypothesis that will test whether or not the microfinance as a proxy for financial inclusion and growth that eradicate poverty. In other words, whether microfinance will be able to eradicate poverty, where microfinance is used as a proxy for financial inclusion. Second one, we have the available data that we have taken from 1985 to 2013 has been collected from Microfinance Regulatory Authority website, and the data stream data has been taken on yearly basis. And we have chosen Bangladesh as the case for empirical study because Bangladesh seems to be the home of microfinance. And the model actually relates between the RGDP, that is the real gross domestic product, which is indicating the growth of economy, as a function of, number one, is the MFLA, which is the microfinance loan and advances, which means that it is a function of microfinance, financial inclusion. Secondly, is the real interest rate. Thirdly, is the inflation. So these are the three independent variables that we try to simulate in order to see whether there is any relationship with the actual growth or not. And we have used the methodology. We have used two types of methodologies. Number one is the Johansson co-integration test. We want to see whether the variables are co-integrate. In other words, they are related to one another. And the second one is vector error correction model, where we try to see what will be the errors, whether the variables can be used. Now, okay. Why Bangladesh? Because it is known as the birthplace of microfinance, and Bangladesh is well known for its minimalist Grameen program, focusing mainly on livelihood enterprises. Next, microfinance in Bangladesh have served about 20 million people. Grameen itself has served 7.2 million, ASA 6.4, and BRAC and another 5.3 million. So I think it's about the biggest microfinance in one particular country. And the average size of the loans stands at Bangladesh Taka 8,000, making the Bangladesh microfinance segment a vibrant US 2.3 billion industry. At the microfinance institution, claim to have reported excellent repayment rates of 98% and above, right? And I think this is not only true in Bangladesh, but also true in many other countries. What we have shown is that all the four variables are non-stationary, and therefore we can put them into one particular formula as I've given earlier. And in terms of Johansson co-integration, the co-integration is around 1, which suggests that they all move in the same direction. And the result analysis, number one, the results show that the independent variables, that is the microfinance loan and advances, the rate of interest, as well as inflation, jointly variations or changes in economic growth. In other words, they actually jointly influence the economic growth. More specifically, the result reveals that a microfinance bank operation has a positive impact on economic growth. If you see, for example, the next slide, the only, out of the three independent variables, right, that is the inflation, the microfinance loan and advances, and the third one is the rate of interest, you find that the only exogenous variable is the microfinance loan and advances. The others are endogenous. What does it mean? What it means is that the others are not influencing the growth as much as microfinance itself. So to me, this is a very important empirical study to show that microfinance itself, as a proxy for financial inclusion, is actually contributing towards economic growth of the country. That simply shows that the influence of microfinance is very, very great indeed. So that is the takeaway that I would like to share with you. In other words, this is a very empirical study. It's not something that we take out from the air, from the thin air, but it is actually empirically studied to show the relationship between microfinance and economic growth. What it means is that the more microfinance we have, the better the economic growth of the country. Why? Because microfinance attacks the poor. And when the income of the poor increases, it should actually affect the economic growth of the country. With that, thank you very much. Assalamu alaikum.
Thank you very much, Professor Al-Habshi. It was quite interesting study, which demonstrates that microfinance really is the right instrument for us to pursue poverty reduction, and has been proven quite convincingly. Let us now move to Brunei. Yang Mulia Dayang Hajah Rashidah binti Haji Sabtu, silakan. In the meantime, we are actually getting very close to the allocated time. If Brother Nuri, would you mind checking if we can still have extension? The room is not used by other program. Coming to this room. Okay, please.
Good afternoon, ladies and gentlemen, and to my Muslim colleagues, Assalamualaikum warahmatullahi wabarakatuh. First, let me thank IDB and ADFIMI for inviting me to speak today. It is an honor for me to be able to share some insights on financial inclusion, a topic that has attracted significant attention to policymakers worldwide over the years due to its importance in generating sustainable economic growth and development. Today, I shall be presenting on the status of financial inclusion in Brunei Darussalam. My presentation will be covered into three sections. First, I will touch on the status of financial inclusion in Brunei based on various data. Next, I will also present some insights on financial inclusion for SMEs in Brunei. And lastly, I will share a few areas for discussion as a way forward for policymakers. To start off my presentation, let me just share some background information about Brunei Darussalam. Brunei is a small country, not just in terms of land size, of only about 5,665 square kilometers, but also in terms of population, where there are only about 420,000 people living in the country. Our economy is mainly dependent on export revenues, particularly oil and gas revenues, where in 2015, income per capita was about 32,000 USD per person, one of the highest in the region. In terms of the financial system, Brunei Darussalam has a dual financial system comprising of both conventional and Islamic. The banking sector dominates the financial system, making up 82% of total financial assets. There are 7 fully licensed banks currently operating in Brunei and an Islamic trust fund. In addition to that, there are also 3 finance companies, 2 offshore banks, and 13 insurance companies and takaful. Before I speak about financial inclusion in Brunei, let me just explain briefly on what is meant by financial inclusion. Generally speaking, when one talks about financial inclusion, they are essentially referring to both enabling individuals and enterprises to participate in the formal financial sector. This allows the smallest economic actor in the country to contribute to national savings and investment. One of the ways to ensure financial inclusion is to have good access to finance, not just in terms of geographical proximity, but also in ensuring the availability of financial products and services that are of good quality. However, the availability of financial products and services in a country would not guarantee a financial inclusive society. These products also need to be affordable and low cost so that the population, especially the low-income segment, can benefit from them. Another important building block for a financially inclusive society is on financial education and literacy. Financial education can promote the use of formal financial services as individuals can make more informed and appropriate decisions on their finances. Now, let me present to you some key statistics to show the status of financial inclusion in Brunei Darussalam. One of the common measures of financial inclusion is on the number of banked population in the country. Based on last year's data, there were 390,300 depositors recorded in the banking industry, which represent about 95% of the population. While this entails that Brunei has a financially inclusive society, this measure may also be misleading, as one individual may have more than one deposit accounts. A finer analysis is therefore needed to measure the number of bank people in the country. Looking at the table on the right, which shows the distribution of branches and ATMs in Brunei, we can see that most bank branches and ATMs are heavily based in Brunei Muara district. This is justified by the fact that Brunei Muara district is the most populated in the country, and it is also where the central government is located. This slide compares Brunei Darussalam and its regional counterparts in terms of commercial banks branches per 100,000 adults and the number of ATMs per 100,000 adults. Based on World Bank's data in 2014, there were 20 commercial bank branches per 100,000 adults in Brunei, which is a relatively high number compared to other countries in the region. Likewise, the number of ATMs per 100,000 adults stood at 80 in Brunei, which is also one of the highest in the region. Based on these statistics, we have seen in this slide and the previous slide, it can therefore be argued that access to finance in terms of geographical proximity is not really a significant problem in Brunei compared to other countries in the region. But what about the use of financial services? The slide shows other indicators to measure the level of financial inclusion based on the use of financial products and services in the country. Firstly, in 2015, only 22% of the population were reported to have life insurance, which implies a low level of insurance penetration in the country. Secondly, 76% of the working population had accounts in retirement fund or access to savings for retirement. For everyone's information, citizens and permanent residents employed in Brunei either in the public or private sector, are required to participate in the National Retirement Scheme. Foreign workers, meanwhile, who are also part of the working population, are not required to make any contributions out of their income to this scheme. Apart from that, in 2015, a total of 182,400 individuals were also reported in the credit bureau system. This suggests that 66% of the working age population had loan facilities. Data based on the credit bureau system also showed that 39% of the working age population had credit card facilities. Looking at these key statistics, they highlight that in terms of the use of financial products, more can actually be done to encourage the population to use and benefit from financial products and services in Brunei. Challenges for Brunei Darussalam. While geographical access to finance may not be a significant problem in Brunei as mentioned earlier, there are still some challenges that need to be overcome in Brunei. Based on a nationwide survey on financial literacy done by the Center of Strategic and Policy Studies and AMBD in January 2015, findings showed some staggering statistics, including 49% of households do not make active savings, 34% do not have a household budget, and 24% of households had to borrow to fund their daily expenditure. What these numbers highlight is that there is a poor financial management behavior amongst households in Brunei. Some of the factors explaining the poor financial behavior can be attributed to the two reasons listed in this slide. The first one, the local population in Brunei are generously provided with welfare benefits by the government, such as free education and free health care. This therefore reduces the incentives for the locals to save or obtain any insurance or takaful products. Secondly, there is generally a lack of awareness on the availability of financial products and services being offered in the country. Not only that, but individuals also lack understanding on financial products and services that are also on offer. With that being said, AMBD therefore recognizes that enhancing financial literacy is important in order to have a more financially inclusive society. Some of our initiatives to promote financial literacy include, the first one is holding a National Savings Day every 28 May in order to remind the public on the importance of savings and to instill sound financial management behavior amongst the public. AMBD also participated in the Global Money Week with other agencies last March to increase financial awareness among students and children. AMBD also collaborated with CSPS in January 2015 to undertake a national financial literacy survey and strategy to assess the level of financial literacy in the country. From this project, some strategies were suggested by CSPS, which includes financial education and financial information and advice. Apart from the above, continuous talks that are also being held from time to time, as well as publication of newspaper articles to raise awareness on various topics related to financial management. Next, as mentioned earlier, I will now present some insights on access to finance for SMEs in Brunei. First of all, SME lending has been on a rising trend in Brunei. SMEs in Brunei make up approximately 95% of businesses in the economy. In 2015, 9,900 SME accounts were recorded in the banking sector, and more than 10,000 commercial entities were reported in the credit bureau system. Nevertheless, access to finance is still a common problem among SMEs in Brunei, where lending to SMEs only account for 9% of total loans. AMBD, as the regulator of the financial sector, recognizes the importance of SMEs as the engine of growth in the country. As such, Promoting access to finance for SMEs remains a high agenda in AMBD. Some of AMBD's initiatives include the establishment of the Credit Bureau in 2012, which has helped banks to make more informed credit decisions. Second, one of AMBD's objectives is also to establish an efficient payment and settlement system. Towards this end, we have launched a real-time gross settlement system for the transfer of large amount of funds and also an automated clearinghouse to facilitate payments of checks. And thirdly, the implementation of a collateral registry, which is also underway, which is intended to provide a secured lending infrastructure framework for SMEs. Financial institutions, on the other hand, such as banks and insurance companies, also play an important part in improving access to finance for SMEs, as they are the financial intermediaries in the economy. For banks in Brunei, in particular, they have continuously conducted financial education and awareness programs, such as roadshows. At the same time, some banks have also developed financing tailored for SMEs, example, Enterprise Facilitation Program. Meanwhile, there isn't currently any specific insurance products for financing SMEs in Brunei. There are insurance products available for business companies to insure their assets, such as their properties. Before ending my presentation, let me present some policy ideas as a way forward, not particularly just for Brunei, but for any other countries in the region. These ideas are based on internationally reputable scientific research on financial inclusion, which we as policymakers can learn from and probably one day also adapt in our own jurisdictions. First, a wide range of literature has shown that people have self-control problems when making consumption and saving decisions. In other words, we can't simply have a policy to encourage people to save and they will follow suit, because in actual fact, people just prefer instant gratification. Therefore, policymakers need to acknowledge and take into account of such behavioral psychology and instead develop a mechanism or commitment device to smooth individuals' consumption pattern and thereby helping them to manage their finances more efficiently. This can be done through reforming paycheck cycles, such as increasing pay frequency. Another area to improve financial inclusion is to facilitate the processes that can encourage the use of financial products and services. For example, by standardizing product disclosures and ensuring application forms are user-friendly is another way to overcome barriers of credit. Thirdly, it is important to develop general education and, more importantly, on improving children's numeracy skills as a life skill for them. Numeracy skills do not only point towards teaching children basic mathematical skills, but for them to be able to apply these skills to meet the general demands of life at home and outside. Research has shown that people without numeracy skills suffered worse advantages in employment than those with poor literacy skills. Lastly, more emphasis should be given on building research and to ensure continuous research is being done to assess what works and what don't. When developing policies in general, there is a wide array of literature to test the effectiveness of different types of policies across the globe, which policymakers can benefit from. While there is no one-size-fits-all, policymakers surely can learn from best practices and general templates to cater to their country's needs based on growing research and evidence elsewhere. I have now come to my end of presentation. Thank you very much for listening.
Thank you very much. Thank you very much, Puan Haja Rashida. I think the three panelists have been very clear. The research conducted by Professor Al-Habshi was quite instructive, showing that microfinance has shown the efficacy of its system as a tool for accelerating the reduction of poverty and boosting prosperity. Now, and Indonesia, with their PBMTs, is a living example of how successful, if it is managed well, how successful initiatives in microfinance can be in addressing those questions of reduction poverty. Now, Brunei Darussalam is quite in an enviable situation. It seems to me that financial inclusion is no longer a problem in Brunei. Of course, there are some issues faced among the SME community, which is mostly has to do with promoting further the role in the economy, although 90% of Brunei economy is contributed by the SMEs. Now, I have been signaled that our time is up. I don't think there is time for questions. Do we have time? Anything? Anyone can signal if we have time or not? No? All right. Unfortunately, the signal was quite confirmed that we don't have more time. So, but I hope all the speakers will be around here. If you have questions, just approach them and ask the question, and I hope more conversation will arise after this session. So thank you to the speakers for being here. Thank you to the participants for their interest, and thank you to ADFIMI for organizing this important event. We hope that there are going to be more opportunities for us to discuss pertinent issues in the future. Thank you very much. Billahi taufiq wa hidayah. Assalamualaikum warahmatullahi wabarakatuh.